Welcome back to Investing Talk Podcast. Today, we're tackling a question that's likely on many of your minds, especially if you're keeping an eye on the digital marketing space. Is Zeta Global a good time to buy right now? Before we jump into today's analysis, just a quick reminder. If you're finding these discussions helpful, please take a moment to subscribe, like this conversation, and maybe leave a comment. Your engagement truly helps us bring you more of this content. And look, if you really enjoy what we do, maybe consider buying us a coffee. Every little bit helps keep these microphones on. Also, if there's a specific company you'd like us to look into next, just drop a comment below and let us know. We're always interested in what you're thinking about. Okay, let's unpack this. We've compiled, various sources, research, and our own notes to try and give you a comprehensive picture of Zeta Global. Our mission today is basically to distill the most important nuggets of knowledge, the key insights from all this material, giving you a shortcut to being, truly informed.
Indeed. We'll be walking you through the fundamental health of the company, how its current valuation stacks up, what the technical charts might be signaling, the overall market sentiment surrounding it, and of course the potential catalysts, what could drive the stock higher, balanced, naturally, with the risks involved. It's really about giving you a clear, balanced perspective so you can feel confident in your understanding.
So let's kick things off with the absolute basics. When we look at Zeta Global, how are they actually performing? I mean, revenue, profit, are they growing? Are they making any money yet?
Well, what's truly fascinating here is the sheer velocity of their top-line expansion. Our sources show Zeta Global's revenue has shown really significant, almost relentless growth. For example, in Q1 2025, revenue jumped a remarkable 36% year over year, hitting $264 million.
36%? Wow.
Yeah. And if you zoom out a bit, their total 2024 revenue, $1.01 billion. That was a massive 38.02% increase from the year before. So this isn't just solid growth. Zeta Global is absolutely sprinting forward on sales. They're outpacing many in the sector, and it really paints a clear picture of strong market adoption for what they offer.
That revenue growth certainly looks impressive on paper. But, for a company that's been around, are we seeing signs of maybe market saturation? Or is there still massive untapped potential for them to keep growing like this? And maybe more importantly, are they actually turning those big revenue numbers into profit?
That's a critical question, definitely, especially for a growth-oriented tech company like this one. So while they still report net losses, it was around negative $51.81 million on a trailing 12-month basis. It's really crucial to note these losses have narrowed significantly.
How significant?
By a whopping 62.79% compared to 2023. So that tells us they're getting much more efficient, right? And even more positively, their adjusted EBITDA.
Right. That's a key metric for these kinds of companies.
Exactly. It's basically a measure of their operating profitability before you factor in things like depreciation or financing costs. That increased 53% to $46.7 million in Q1.
53% increase there, too.
Yes, and it achieved a solid 17.7% margin. This isn't just a number. It really signals a profound improvement in their operational profitability and clear, tangible progress toward actually turning a net profit down the line. It shows they're not just growing revenue for growth's sake, but really optimizing how they operate.
That shift from widening losses to narrowing them quite dramatically, and that big jump in adjusted EBITDA, that's definitely a positive sign. But, for a growth company still showing net losses, understanding their liquidity is key. What about debt and cash flow? Are there any, red flags lurking there investors should know about?
You're absolutely right. Cash is king, especially when you're funding growth. While the explicit debt levels and detailed free cash flow figures weren't extensively laid out in our sources, the significant narrowing of net losses and those improving adjusted EBITDA margins, they're strong indicators of better operational efficiency, and that suggests a strengthening financial position overall. Ideally, yes, investors would want to see really robust free cash flow to ensure they can fund expansion without leaning too heavily on outside money. But the trend here, overall, it points toward a balance sheet that's moving in the right direction. That's a positive sign for managing their growth.
Okay, good. So moving beyond just the numbers then, what does all this mean for Zeta Global's competitive edge? I mean, digital marketing is a crowded space. What makes them stand out?
Right. If we connect this to the bigger picture, Zeta operates what you can think of as sort of a master control hub for marketing. It's a truly omni-channel, data-driven cloud platform.
Omni-channel meaning?
Meaning they help businesses connect with customers across all channels, email, social, web, even offline stuff, using smart data and AI to personalize basically every interaction. They leverage advanced AI and machine learning, not just as buzzwords, but to process vast amounts of opted-in consumer data. And that opted-in part is critical. It means it's high-quality, privacy-compliant data that gives them a much better foundation compared to competitors maybe relying on older, less reliable data.
Oh, okay. The quality of the data is key.
Exactly. And here's where it gets really interesting. They have a significant platform direct revenue share. It's currently 73%, and that's up from 67%.
What does platform direct mean in this context?
Basically, it means the vast majority of their income comes directly from clients deeply embedding and relying on Zeta's own technology. It's not just a bolt-on solution they use sometimes.
So they're really integrated into their clients' operations.
Yep, precisely. This deep integration makes clients much less likely to leave it, creates stickiness. And that points to a really strong business model, creating a sort of moat in this very crowded digital marketing tech space. They're not just providing a service, they're becoming indispensable.
That's a great overview of the business itself, its strengths. Now that we understand the strong fundamentals and improving efficiency, let's talk price. How do we even start to value Zeta Global right now, especially given they're still kind of in that growth phase?
Well, you hit on a key point there. Because they have current net losses, a traditional PE ratio, price to earnings, isn't super meaningful. There are no positive earnings, right?
Right, makes sense.
However, their forward PE ratio, which looks at expected future earnings, that stands at 22.93, which, is considered pretty reasonable relative to the kind of high growth we just discussed.
Okay, and other metrics?
Yeah.
Price to sales, maybe?
Exactly. That's another important one for growth tech. For Zeta Global, the price to sales ratio is around 3.4. That's based on their $1.08 billion in revenue and about a $3.68 billion market cap. For a SaaS or cloud company with high recurring revenue, a PS in this range can actually be quite attractive, especially considering their growth rate. Many established, profitable tech firms trade way higher than that.
Okay, so the valuation metrics seem to suggest some upside, especially factoring in that growth. What are the analysts saying? The professionals digging into these numbers all day, are they seeing the same kind of potential?
Analyst sentiment is actually quite optimistic. It lines up pretty well with the operational improvements we've highlighted. The average price target across the analysts covering Zeta is about $28.57.
$28.57 compared to around $15.60.
Exactly. So that implies an impressive 82.79% upside potential from the current price. Now, forecasts do range widely. You see some as low as $15, some as high as $45. That reflects different models, different risk views.
Sure, there's always a range.
Always. But the consensus definitely suggests moderate to strong upside potential. It shows that the street, by and large, believes Zeta Global has significant room to run.
We've got a good handle on Zeta's financials and how analysts are valuing it, but the market's also driven by momentum, psychology. So let's peel back another layer. What are the technical charts telling us? What's the recent price action signaling?
Okay, the charts. Zeta Global has been trading recently around $15.60, as you said, but look at the 52-week range. It goes from a low of $10.69 all the way up to $38.20.
How a huge swing.
It really is. That kind of spread clearly shows considerable volatility. The stock can swing wildly, right? And it also indicates a pretty significant downtrend from those earlier highs. It's been a bit of a roller coaster for investors.
Absolutely. And that kind of volatility isn't for everyone. It really highlights why understanding a stock's personality is important. So given that, are there key price levels, areas where we might see support or resistance?
Absolutely. For technical traders, these levels are crucial. Key support looks to be right near $15. That's a price point where buying interest has tended to show up before, maybe preventing further falls.
Okay, $15 support and resistance.
Resistance levels are probably around $18 and $15 to $19. That area is particularly interesting because it's close to the 200-day simple moving average.
The 200-day SMA, right, the long-term trend line.
Exactly. Breaking above that is often seen as a pretty bullish signal for the longer term. Now, on the shorter term side, the 50-day SMA, reflecting more recent momentum, is around $14.06. That actually indicates some recent short-term bullish momentum building up. We also look at the RSI, the 14-day relative strength index. It tells us if a stock's overbought or oversold. Zeta's RSI is currently near 48.
48, so pretty neutral.
Pretty neutral, yeah. Neither extremely overbought nor oversold, which could mean it's kind of poised for a move, depending on the next piece of news or data. And while specific Mackie data wasn't provided, the implied volatility is moderate, around 8.19%. And the fact that it's had green days it closed higher only 40% of the time in the last 30 days, it shows a bit of a mixed picture. Suggests maybe some accumulation is happening, but it's definitely fighting through some selling pressure.
So we've dissected the financials, looked at the charts, but beyond the hard numbers, what's the general feeling, the vibe around Zeta Global right now? What's sentiment telling us?
Well, analyst sentiment, as we touched on, is broadly positive. You've got 15 analysts, mostly rating it strong buy or moderate buy, and those price targets imply that big upside, over 80%. What's particularly interesting, I think, is that social sentiment, what individual investors are saying online, is also quite bullish.
Oh, that is interesting, especially compared to the broader market.
Exactly, because the broader fear and greed index is low right now, sitting at 39. That indicates general market caution, maybe even fear. So this divergence suggests there's specific opportunistic buying interest in Zeta Global, despite the overall market apprehension. It feels like there's strong conviction among its followers.
That's a potentially powerful mix, institutional optimism plus strong retail interest. But a key question always comes up. What are the insiders doing? Are the execs, the board members buying or selling? Anything notable there?
That's a very sharp question. Insider activity can definitely be a signal, right, of management's confidence. Our sources, however, didn't really disclose any notable insider buying or selling recently.
Okay. So not much signal there either way.
Pretty much. It could mean insiders think the current price is fair, or maybe just no large transactions happened in the period our sources covered. It's not necessarily negative, just, well, a lack of a strong signal right now.
All right, let's look forward then. What could really move the needle for Zeta Global? What potential catalysts should investors be watching for in the near future?
Okay, catalysts. A major near-term one is definitely their earnings report. It's scheduled for August 5, 2025. These reports are always critical for growth stocks like Zeta.
Right, they can cause big moves.
Absolutely. A beat on revenue or earnings or positive guidance could really ignite buying interest. A miss could obviously hurt. So August 5th is a key date. Looking longer term, the key drivers will be that continued growth in platform direct revenue, that sticky business model we talked about, and further expansion in their AI-driven marketing solutions.
The AI angle seems crucial.
It really is. As AI becomes even more central to marketing, Zeta's ability to innovate there is paramount. Also, while nothing specific was reported as imminent, keep an eye out for potential M&A activity. The digital marketing space is fragmented.
So they could be a buyer or maybe even a target.
Potentially other down the line, or even just major new product launches that extend their tech lead. Any announcements around AI capabilities or big new customer wins could also act as catalysts.
Okay, so potential drivers are there. But every investment has risks. What are the key things investors absolutely need to be aware of with Zeta Global? What are the potential downsides?
You're absolutely right to focus on risks. It's crucial. There are a few important things here. First, stock-specific risks. While losses are narrowing, they are still reporting net losses, negative EPS.
Right, profitability isn't there yet.
Exactly. That poses ongoing challenges. Until they consistently turn a profit, the stock might remain sensitive to market shifts or any growth hiccups. And we already talked about the high volatility, that wide 52-week range. It means rapid, significant price swings are possible.
Which requires a certain stomach for risk.
Definitely. Then there are sector and macro risks. Digital marketing is intensely competitive. Technology changes fast. New disruptors could emerge, or changes in, say, data privacy regulations could impact their model. And of course, economic downturns. If businesses cut marketing spend, that directly hits Zeta's revenue. Finally, market risk. A beta of 1.29 means it's more volatile than the overall market.
So if the market drops, Zeta might drop more.
Typically, yes. That higher beta means it's inherently a higher risk, but also a potentially higher reward kind of stock.
So bringing it all together then, after sifting through all this, the fundamentals, valuation, technicals, sentiment, risks, catalysts, what's the bottom line? For our listeners, is now actually a good time to buy Zeta Global?
Okay, bottom line. Based on our analysis of the sources, Zeta Global earns a pretty solid rating. Let's say 7 out of 10.
7 out of 10, okay. Why?
The rationale is compelling. You've got solid growth fundamentals, those improving margins are key, and a strong industry position thanks to their tech and that platform direct revenue. But it still operates at a net loss, and there's that inherent volatility and stock-specific risk. That said, the valuation metrics and the strong analyst sentiment, they do support good upside potential. So it looks particularly interesting for growth-oriented investors who have a, shall we say, higher tolerance for risk.
So for someone listening who fits that profile and is considering adding it, what's a reasonable entry price range? Where might they look to get in, balancing risk and reward?
Our analysis suggests maybe looking at an entry range of around $14.50 to $16.50. This range tries to balance things, right? It considers the recent volatility, those support levels we talked about near $15, and the potential for a rebound. Entering there could position you well for upside while managing some of that near-term risk.
And who is this stock really best suited for? Is it for everyone?
Definitely not for everyone. It's primarily recommended for long-term investors who believe in the thematic growth of AI and cloud marketing, provided they have that risk tolerance for the current lack of profitability and the stock's volatility.
What about short-term traders?
Well, short-term traders might look to play around earnings reports or specific technical levels, but honestly, they absolutely must monitor the volatility very closely and manage risk tightly. This isn't a stock for the faint of heart in the short term. And for those short-term folks, if they do jump in, a suggested stop loss might be around $13.50. That's strategically below recent support, maybe a 10% downside from the top of that entry range we mentioned.
And a take-profit target.
Initial goals could be somewhere in the $22 to $28 range. That lines up with that 50–80% upside potential the analysts are seeing. But, and this is crucial, you've got to be dynamic. Adjust based on earnings results, technical breakouts, market conditions. Don't just set it and forget it.
It really sounds like a promising company, lots of potential, especially with that growth and improving efficiency, but yet clear risks too. Profitability, volatility. You have to watch those closely. It really is that classic growth investing balancing act, isn't it? What really stands out to you from this whole analysis of Zeta Global, for me, it just highlights that dynamic nature of growth stocks, that intricate balance between amazing revenue growth and that often long winding road towards consistent profit.
Absolutely. And this evaluation, it reflects the data and forecasts available now. So as always, it's just critical for you, the investor, to monitor those upcoming earnings, watch sector developments closely. It's a good reminder. Even with powerful trends like AI and marketing, patience and vigilance are key. And knowing your own risk tolerance, of course.
So for you, our listener, maybe the provocative thought for today is this. In this super fast-moving world of digital marketing tech, how much weight should you give to current profitability versus the potential for exponential growth, especially growth fueled by cutting-edge AI, when a company is still kind of solidifying its market position and proving its long-term staying power? Where do you draw that line? Thank you for joining us on Investing Talk Podcast. We really hope this exploration of Zeta Global has given you some valuable insights and helps you make smart choices for your own portfolio. Until next time, stay informed and make wise decisions.